From us here at Toggle, welcome to today's edition of Toggle's Daily Video Insights, particularly to those who are joining us for the first time. This is the time when we take one of the insights produced by Toggle and take a deeper dive to see what the price pressures and drivers are that Toggle has been uncovering in one of the thousands of assets that it monitors and analyzes on a daily basis. If you'd like to see more of these insights, subscribe to our YouTube channel or go to toggle.global, where you can also test drive the Toggle Copilot, which is the system that we are using here. Today, the focus is going to be on Corporate Office Properties Trust, which is a real estate investment trust that invests in corporate offices. And what Toggle is actually highlighting, as you can see here, there's been a string of actually bullish price pressures that Toggle has been recently uncovering, including this one that has bounced right exactly at the red line. But the most recent one actually that we have seen today is actually based on analyst revisions. So we're going to take a look at this one. What Toggle is basically noticing is that street analysts are turning a little bit more bearish on the outlook for this particular trust, and that historically, across 7 similar occasions when this has happened, the REIT actually delivered almost 9% over the following 3 months. And so looking at the picture here, you can see that with the starting price of $26.88, the target price would be around $29.21. But of course, you would like to see the price staying within this confidence interval. If it were to fall outside of it, and particularly falling below this red line at $25.71, the odds of the driver being analyst expectations for the price action would be significantly diminished, and it's the point at which it's worth revisiting the thesis and potentially placing the stop loss level here and reviewing and coming back to it at some other time. Now, looking at why it might move, we can see exactly the periods previously when you've had this kind of bearish swings in the percentage of positive revisions, positive EPS revisions, as revealed by the IBIS data about Wall Street analysts at the moment. And so whenever this has happened previously, you can see, again, by squinting a little bit, it's typically been at worst kind of a flattish period, but at best potentially some really, really strong bounce back in the stock price over the near term. We can see this also by checking out the back test. And again, you can see that in many cases, actually the subsequent return went as high as 15%. But of course, there were downsides that were clustering around 5%. So there is obviously the downside, which makes it all the more important to really respect the stop loss levels that you set for yourself, or at least that you manage risk within the overall portfolio. You can see here that a dollar invested in and reinvested in each one of these past 7 insights would have generated about $2.4 by now. So again, even trading on this insight alone historically actually seems to have worked, and so it's worth taking it into account to see how it fits in the overall fundamental picture that you might have formed for this particular REIT, particularly if you have a view on how the pandemic is going to play out and so on. So much for OFC today in the daily brief, which by now should be in your mailboxes already. We also discuss the echoes of the last few days unwinding of the trades by Archegos Capital, which resembles an earlier period of the LTCM debacle that had to be bailed out by Wall Street banks to prevent a larger meltdown. So take a look. Thanks for your attention.